Thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. If you're a little new to us, whether it's our videos or our channel, uh, what we do is we kind of get the background information, what's impacting mortgage rates on a daily basis. Usually do it Monday through Friday when the markets are open. Obviously, with exceptions to any holidays when the markets are closed. Uh, but anyways, we like to try to get these what's impacting, whether if it's something from the economic calendar that popped up that it should impact it or is impacting it. If it could be some sentiments with the investors that may have changed, whether if it's sometimes good news becomes bad news or vice versa. Sometimes headline news are kind of driving the markets. So we kind of get that information out to you so that way if you're in the real estate market and trying to figure out what's going on here, or hopefully this will provide some clarity for you guys when you're talking with your clients. If you guys are a consumer looking to buy or refinance, you're probably looking at rates, see where they're going. Hopefully, this will give you some inclination as to the trend of mortgage rates, if they're going up or down, and if it's a good time to lock in, or if it's you want to hold off, or whatnot. So it gives you hopefully a more informed helps you make a more informed decision for yourself, what's best for you and your family on what to do next. If you guys if you guys got questions about this, please feel free to reach out on there. We're here to assist you. A little bit about myself is I am a loan officer. I do work with a national lender. I've been doing this for about 20 years, and if you guys here to help you guys. So if you guys, we do lend in all 50 states. So if you guys got questions about whether it's mortgage programs or mortgage rates or whatnot, we're here to help you guys out and give us a shot. We'd love to be able to help you guys out. Meanwhile, why don't we just jump right into this? This week, as I indicated yesterday, will be kind of a lighter week in terms of economic data. The big one will be on Friday, which is the CPI, which is one of the important inflation data. And the last time we had CPI reported in November, it had a pretty big spike in it, and due to that, we had a pretty negative reaction to it. So buyer beware, just so to speak. But today, however, we do got the productivity and we got the labor costs, and these are the quarterly, and these will be the final numbers for that. So the previous report came out at down 5%. Forecast is supposed to come down a little bit, about 4.9%, and it worsened down 5.2% productivity. Now you got the labor costs went from 8.3%, which it was saying to keep that trend at 8.3%. However, it spiked at 9.6%. So this is inflationary data. This is something that the Fed really looks at heavily, especially when they're making decisions. And this is probably one of the reasons that gives them more ammo when they make their next FOMC this month. And this is give them probably a little bit more ammo in to go ahead and speed up the tapering process as well as raise rates and to raise rates next year. So be prepared for that. They kind of already inclined, and this will probably just give them that much more uh, data to go ahead and work with. Uh, Headline news is basically investors. They're getting a little bit more calmed down in regards to the Omicron variant, finding that it is more contagious, however, not as lethal as the Delta variant. So they're feeling a little bit more comfortable about things. Where they don't really have the hospitalization rate that we're finding in other countries are reporting really no fatalities or any hospitalization rate from this variant, and this is kind of easing things up in terms of the confidence by investors. Uh, you know, as we also indicated. China yesterday went ahead and their People's Bank of China basically lowered the reserves to try stimulate their economy a little bit as it's been kind of dropping low for them. And then we're also got another geopolitical tension rising between with Russia and Ukraine, where they're building up troops along the border right there. And Biden is scheduled to be speaking with Putin about the situation, and we'll have to kind of see how that transpires. So, without further ado, we'll take a look here at the mortgage rates to see what's going on over here. Uh, right now, we're down about 16 basis points. We started lower than where we were yesterday. A lot of this is really coming down to the stocks. It's as the Omicron fears are subsiding a bit, investors are putting more money back into the equity market. And MBS is basically bonds, and bonds are a flight to safety. So when they were worried about it, like last week, a lot of those investment dollars are going back into the bond market as a safety valve. Now that they're feeling a little bit more comfortable about things, they're taking money back out of it and putting it back into the equity market where they get a greater, as they feel, they'll get a greater return on their investment dollars here. So that's what we're kind of seeing here as a result. Right now we're down about 60 basis points. This can basically translate to about an eighth of a percent in the rate pricing. So be prepared to see a little bit worse in price sheet. We did have a little volatility where we did rise upwards, and since then we have pulled back again. We'll have to wait and see if it continues that. So as you see here, we went up, then we came back down, then kind of worked our way back up again, and now we're back down again over the last couple hours here. And if you take a look at the Treasuries, very similar, working its way upwards to another trajectory here. We're just under 1.47 right now, and again, Treasuries are working their way up. Tomorrow we'll start seeing some auctions going on with the Treasuries, so I think the 10-year begins tomorrow, and that will be important. That could affect obviously our pricing. If to see if there's an appetite from investors. So without further ado, let's take a look here at the average interest rates for a conforming loan limit in the U.S. These do have points built into it. If you're not aware, rates aren't one size fit all because there's a lot of variables that go into it. One, we'll start off with the different loan programs have different rates associated to them. We got built-in equity or down payment combined with your FICO scores, also combined with if it's a primary residence versus a investment property, also combined with if it's a single family versus a condo or multi-unit property. All these are different factors, and it's not just one out of those variables, it's all of it combined together. And that's why sometimes these you'll have different rates being presented to different people. And so without further ado, let's take a look at this. So the 30-year fixed now is at 3.22, and the 15-year is at 2.57 on there. So, all right, folks, that's a wrap for the day. If you guys got questions or anything we can help you guys out with, again, please shout out to us. We're here to help you guys out. Hope you guys have a great rest of your day. We'll look forward to see you guys at tomorrow's video. And thanks for watching. If you guys like these videos, please help us out by smashing that like button and follow. Have a great rest of your day, and we'll look forward to seeing you tomorrow. Bye-bye.